All right, the red dot says we're live. We're going to go crazy deep on some numbers today for this video. This is not a clickbait video at all. It's not. If this scenario pans out for you, if this scenario is you, if you're a homeowner who bought in May 2019 or before, if you're a homeowner who bought in May 2019 or before, and you made your monthly payments, every single month up until today, and you're thinking about selling, but you're like, there's no way in heck I'm going to pay 8% interest rate. This video, I'm going to walk you through step by step. I was talking with another customer about this yesterday. I wanted to bring this to you guys. I wanted to bring it to you guys because if you bought a home in 2019 and you want a bigger home, you want another bedroom, or you want another garage, it's possible to still not double or triple your monthly payments. It's possible. What we're going to be talking about today is assumable loans. Assumable loans, guys. Now, this isn't financial advice. I'm a real estate agent. I'm giving you a scenario, something we can strategize on, you and my team, when we're looking for your house. This is something we can strategize on if this is you. If these criteria meet you, let's do a Zoom call. Let's do a Google Meet. Let's go in depth on your numbers for your specific case, because this scenario that I'm going to show you today is mind-blowing. It's mind-blowing. Okay, enough jibber jabber. Let's jump into the numbers right away. If you bought a home in 2019 for a purchase price in 2019, and I'm looking at 2018 and 2019 homes. Let me show you this screen real quick. If your purchase price for a brand new 3-bed, 2-bath, 2-car garage home was around $211,000, where's the share screen button? Right here. The median price, guys, right here. For a 3-bed, 2-bath, 2-car garage home in 2018, 2019, the median sales price was $211,000. Okay? Keep that number in your head. Now, your home, because of the pandemic and the low inventory and everything else, $1 home. These are Edmond numbers, guys. Just so you know what city I'm talking about. These are Edmond numbers. A $305,000 home. That's a ton of equity, right? Well, Josh, buying down points isn't going to save me that much. Just wait. Just wait. Let me show you the scenario so you can be like, no way. Because I'm blown away by it, guys. And I've been working on this presentation for the last hour so I can show it to you. So your home today could be worth around $305,000. Just go to my website, oklearnmore.com, oklearnmore.com. Click on sell. It'll pop up, put your address in there, and it'll give you an estimate of what your home is currently worth. Okay, you can put your address in there. But remember, that's just an estimate. One of my team members or I are going to reach out. We're going to go in depth on exactly what your home is worth. But if you want to know your home's current value today, and you bought before 2019, if you bought 2019 March, if you bought March 2019, January 2019, May 2019, and it was a 322, whatever the price range is, you spent around $211,000. You're looking in Edmond, that house now being worth around $305,000. Mind-blowing, right? Mind-blowing. Congratulations. Congratulations. You know, look at this. Your mortgage payment, so to keep your mortgage payment the same when you go to buy a new home with another bed, with another garage space. If you want a 4-bed with a 3-car garage, look at this right here. Look at this. Look at this. Homes. That's today's value. Sorry. Homes right now, you could get, these are homes that were purchased or built in 2001 or newer. 2001 or newer in Edmond. You could pick those homes up right now for a median price of $365. Do you see that? Oh, my banner's in the way. Get that banner out of the way. Right there. Median price $365. You see that? Right there? $365. For a 4-bed home with a 3-car garage in Edmond today, over the last 30 days, that were built 2021 and before. The reason we're doing built 2021 and before is because those loans have 3.2% interest rates, in and around about there, 3.2% interest rates. So your equity in your current home, if you were to sell it today that you bought and made your payments on, never missed a payment whatsoever, you sell it for $305,000. Your 3-bed, 2-bath, 2-car garage home in Edmond. After closing costs, title, commissions, all that, and taking out your balance, you'll have around a balance of $183, around $183. Everyone's rates are going to be different, okay? This is your amortization schedule that you would have received. So you're about 60 months in on your payments, okay? Your balance is around $181,000, around $181,000. If you made all your payments on time, never missed a payment, and the going interest rate when you bought your home in May 2019 is going to give you an amortization schedule close to this. So when I plug in those numbers, guys, those numbers, $305,000 sales price, $183,000 loan payoff, $22,000 in closing costs, commissions, all that stuff, and you get a credit back for half the HOA, you're walking away. Your net is $100,000. $100,000. Now check this out, guys. Check this out. This home that someone bought in 2021, before January 2022, they bought this home 2021 and before, $365. 4 beds. You get an extra bed and 3-car garages. You get another garage. You're like, what are you getting at, Josh? You're going to assume their loan. If their loan's assumable, they might even have a 3.2 interest rate. A 3.2 interest rate. So if they have a 3.2 interest rate and they've only been paying on it for 24 months, their balance is $337,887 based on 5% down, a 3.2 interest rate, and they never missed any payments. These are all assumptions, guys, but it gives you an idea on what we can look for to keep your payments the same. That loan that you were paying on for your 322, 3-bed, 2-bath, 2-car garage that you bought in 2019, your monthly payments were around $956. This seller's monthly payments are $1,545. That's unheard of right now, guys. Unheard of. So you and your equity, what you have, that $100,000 that you walked away with at closing when you sold your $305,000 house, you're going to assume the loan of anyone who bought a 4-bed, 2-bath, 3-car garage home in Edmond. This is all around Edmond. I'm trying to keep the scenario as close as possible. Before January 2021, you're getting the sweet interest rate. Their balance is only going to be at $337. Let me jump over here real quick. Buying their home today for $375,000, because when they bought it, it's now a $456,000 home. Their $456,000 home that you're going to buy today has an $81,000 difference in their purchase price and their sales price. So right there, they have $81,000 in equity. Okay. You've got to cover that with that $100,000. Plus their loan balance is down $37,500. So you've got to cover that. You've got to cover their loan balance, the loan balance to the sales price. You've got to cover that. So as long as you have in the savings another $18,500, another $18,500 plus the equity that you're taking out of your home that you bought in 2019 that is almost doubled in price. That's almost doubled in price. You take that $100,000, you take $18,500, guys, and that's where you're still going to end up with a monthly mortgage payment of only $1,545 ish. This is all a scenario. This is all to show you that there's ways to keep your payments down. We've just got to go find an assumable loan. And we know that the house can't be built before 2021 or 2021 and before, that's going to have that really amazing interest rate, probably 3.2% if they were a good creditor, if they were a good borrower. So don't rule out upgrading your house yet if you need another bedroom. Don't rule out upgrading to your house if you need another garage. If the 15-year-old is getting ready to be 16 and you don't want them parking on the street and you need another garage, don't rule it out. Because if you bought a 322 in Edmond for $205,000, and you need a 322 today, a 4-bed, 2-bath, 2-car garage today for around $465,000. $465,000. Yep, right there. Oh, look, I can point at it. $465,000. You might actually have the equity in your home to move up and still have an amazing $1,545 a month payment. $1,545 a month payment. Now you have to qualify for the loan. You have to qualify for the new balance, your debt to income, and all that other stuff. You've got to qualify as a borrower. But guys, there's ways out there that if you're okay buying a 2019 home, if you don't have to have a brand new home, and taking the extra 90 days to 120 days it takes to assume a seller's loan, guys, you've got a scenario here where it's possible. So I just wanted to bring that to your attention. If you're maybe you're an investor and you don't care about the home, you just want the low interest rate, you could assume the loan. As an investor, assume the loan. If you've got an extra $200,000 in your bank, we can set up a search. My team and I can set up a search for homes built 2019 and newer, and then we can also select assumable loan, and then we can find out where those rates are at, what those loans are at, what those balances are at, so that you as an investor or you as a homeowner who wants to buy a home can still potentially get an affordable mortgage. Guys, mortgages are crazy expensive right now. People are telling me every day they're crazy expensive. I agree they're crazy expensive. Housing prices have almost doubled over the last 10 years, which is absolutely mind-blowing. And in the last 5 years, they've gone up 33% to 45%. It's crazy, guys. But don't lose hope. If you need the lower monthly payments and you've got a ton of equity in your home and you've got some extra savings, there could be ways to just buy out the equity position that a current home seller, if they bought before 2019 and they're on one of those sweet 3.22% interest rates, and you've got the equity to split the difference, guys, you could have a super affordable home payment. So this is a scenario I wanted to bring to your attention because I was chatting with another investor yesterday, and it was a good reminder. And I haven't put one of these out in about a year about don't if you've got a lot of equity in your home, let's look at assumable loans too. If you don't have to move right away, if you could deal with a 90 to 120 day closing, and the seller's willing to do that, there's some options out there, guys, to still get affordable mortgages. If you enjoyed today's video, if it wasn't too scatterbrained and I kept your attention, please give the video a big thumbs up. This video that's popping up right there, that video that's popping up right there, YouTube thinks it's another good video that you might want to watch. And then absolutely, for all your real estate needs, guys, give me a call, shoot me an email, or schedule a video call down in the description below. My team and I are here to help you with all your real estate needs. Have a great one, guys.